All right, now the markets are up, and we actually had the NASDAQ down more than 100 points earlier, but some of the tech stocks, they turned around. Now, we had the CPI report come out this morning, and that has showed that inflation has risen 0.2% over the previous month, over the month of June. And for the first time in more than 3 years, the CPI number has come in below 3%. Now, inflation is still rising, but at a slower pace than it was before. Now, if you ask anyone on the streets, they're going to tell you otherwise, that prices, they're not coming down fast enough, or they're not coming down at all. And the consumer continues to be constrained. If we just look at Home Depot's earnings report yesterday showing that foot traffic is down and the people who are spending money, they're spending less of it. And we've seen that from pretty much every retail company that has reported their earnings this year. And I don't believe that's going to change. In fact, the numbers, they're going to get worse. Now, it's these CPI and PPI numbers, as they come in and these numbers come in line or they come down and the Fed ultimately cuts interest rates, you're going to see commodities begin creeping up again. And that's going to mean inflation. And we're probably going to be stuck in a whirlwind. And to be honest, we may be in a worse predicament than we were a year ago, because we're seeing the amount of job cut announcements tick up, the amount of people being laid off. We have credit card debt higher than it was a year ago. More people are defaulting on their credit cards than they were a year or two ago. So if we see inflation begin creeping up, we're going to be in a worse predicament, a worse financial environment than we've been in the last 2 years. So there's no reason to wave the white flag and celebrate this economy, because in my opinion, we're getting ready to head over the cliff over Niagara Falls. Now, over the past week, there have been a few commodities that have caught my eye. Now, lumber is one of them. Now, lumber about a week and a half ago neared an all-time low, but since then, it's rebounded a bit, and that commodity is up 1% today. Now, orange juice futures and coffee futures, they continue to stay elevated, and we have orange juice futures up 1.5% today. Coffee futures up nearly 3%. And both of these commodities, they're not too far from an all-time high. And as it looks more likely that the Fed is indeed going to cut rates, we're going to need to turn our attention to commodities, agricultural commodities and energy commodities, because they're very likely to rise. And if oil goes up and agricultural commodities go up, that means food and fuel, they're going to go up in price. So that's going to be something to keep an eye on. Now, I can't emphasize enough how much trouble I believe this economy is going to be in. The bankruptcies, they continue. The layoffs, they continue. And the debt continues to pile up. Personal debt, national debt, municipal debt, corporate debt, you name it, it continues to build up. And I'm not so sure how long they're going to be able to hold this dam back. And I think I can speak with confidence. There are going to be less people with a job 1 month from now, 2 months from now, and so on. And that's going to ultimately mean less spending. And this economy is going to come to a crawl. Now, will the Fed rate cut? Will that help? Sure, but it's not going to be enough, and it's not going to come fast enough. It's not going to help these corporations and people manage their debt, especially if they don't have a job. So over the horizon, we're going to be facing big trouble. Now, this market's green. We'll see if it remains green. And we've got some big corporate names reporting their earnings tomorrow morning. And we're going to have the New York and Philly Fed manufacturing indexes report also, along with the weekly jobless claims. So this market's green, and we'll see if it remains green. This quick stock market commentary, please like and subscribe.